Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo podcast in which we discuss the week's market news. And Robert, it was another huge roller coaster of a week out there in the stock market. At its low point for the week, the S&P 500 was down about 16% and dipped below a critical trend line that the S&P 500 has held for 10 years. However, we rallied going into the weekend, and the S&P ended the week down only 8%. We started this week with a huge loss on Monday, with the major stock indexes down over 7%. And in fact, the market opened so much lower on Monday that it actually triggered what's called a circuit breaker limit. This was the first time this week that we hit the circuit breaker limit. We actually hit it twice this week. And each time we hit it, trading was suspended for 15 minutes to try to slow down the panic selling. That's how bad things got out there.
Yeah, and I also believe that in Italy they actually ceased short selling as well. But unfortunately for users of the trading app Robinhood, they missed out on most of the Monday market action again. Because Robinhood had another major outage. Hopefully listeners of this podcast have already gotten the hell off Robinhood, but if you haven't already, now would be a great time to use our referral link down below. Sign up for Webull.
Yeah, we should have a referral link underneath the YouTube video. If you listen to us on Podbean or iTunes, go ahead and click over to YouTube, give us a search on YouTube, find our YouTube channel, and you can find that referral link there. Tuesday, the market got a 5% rally on news that President Trump wants to cut the payroll tax rate to 0%, and also that he intends to bail out the cruise line industry. But it was a volatile day because the payroll tax cut was just sort of a wild idea he floated. It wasn't something that he actually passed. And the cruise line bailout is kind of small potatoes in the scope of the U.S. economy. And it's also most of the major cruise lines are foreign owned. And so they wouldn't actually benefit from a U.S. bailout of this industry. And here's a spoiler for you on the tax cut. Payroll tax cut is not going to happen. Turns out there's bipartisan opposition to the idea in Congress because it would cost $1 trillion and they would have to raid the Social Security fund to pay for it. And there's a possibility that if they did that, essentially Social Security would run out of money this year and they would not be able to write checks to all the people who are actually entitled to Social Security. So do not count on a payroll tax cut saving the economy. It's just not going to happen.
That reminds me from when we were kids and we were always told Social Security would run out before we became adults. It's like it's coming to fruition.
They're working on it.
Yeah. So Wednesday, the market erased almost all of Tuesday's gains as the World Health Organization declared coronavirus a global pandemic. Travel stocks led the way down, especially European cruise lines, and the NBA canceled the rest of the season, which hasn't happened since 1996 when space aliens attacked NBA players, stealing their talent. For those of you that don't know, this is a Space Jam reference for those born after the year 2000. Admittedly, I stole this joke from the front page of Reddit.
Plagiarism. All right. Thursday, the Dow tanked 2,300 points, deemed the worst day since Black Monday in 1987. It seems like just yesterday, Robert, we were approaching the 30,000 mark for the Dow. We were praising the strong performance of the stock market. And here we are teasing dropping below the 20,000 mark just a few months later. The main thing that caused this huge sell-off on Thursday was President Trump's surprise decision Wednesday night to ban all travel to Europe for 30 days. Trump was widely expected in this speech to announce economic stimulus, and so it was a rude surprise for traders who were looking for some kind of stimulus from this announcement. Instead, we got this European travel ban, which came as a total surprise. Obviously, airliners, shippers, and oil companies will be hard hit, but lots of other businesses will find themselves cut off from markets and supply chains as well. Because this was a surprise announcement, companies had no time to prepare for this or to shift their supply chains around. And as a result, we got one of the biggest single-day point losses in Dow Jones history. Cruise liner stocks all dropped more than 30%, and airline stocks dropped 20%. And other big losers, Robert, were European tech companies. You know that I have some calls on Nokia, some very long-term calls on Nokia. And Nokia took a big hit this week because, of course, it's cut off from the U.S., which is one of its major markets.
Yeah, the market rallied a little bit late in the day after the Federal Reserve announced an injection of $1.5 trillion into the banking system in response to quote-unquote unusual disruptions in markets due to panic over coronavirus. Basically, the Fed is worried about cash shortages like we saw in the repo market in 2019 when interest rates suddenly spiked overnight. A lot of people misunderstood this as a bailout for banks, pending the memes on Facebook. But actually, all of the Fed has done here is set up a fund that can loan out to banks on a short-term basis in case they run out of cash. Banks did get a nice late week rally on this news, with JP Morgan coming out one of the biggest winners.
Yeah, JP Morgan has a lot of exposure to this sort of coming potential financial crisis because it does a lot of leveraged lending. And so I think just the extra liquidity boost to the market here in the banking system, I think gave investors in the banking system a little bit more confidence. And so I think JP Morgan saw a big rally from that. Friday, the market posted a huge 9% rally as the president and Congress neared a deal for fiscal stimulus. And also, there was a U.S. airstrike on Iranian-backed militia on Thursday night, which helped the rally by boosting oil prices over 7%. And the market also got a boost from Trump's announcement that he's waiving interest payments on federal student loans, which should put about $50 billion extra into consumers' pockets this year. So overall, a pretty positive day for stocks. The energy and banking sectors posted some of the day's strongest gains, and even travel stocks rallied from their huge losses earlier in the week. It was one of the largest single-day percent gains in stock market history, with a 9% gain across the major indexes.
I wonder if Trump's going to use that in his speeches for his re-election. We had the largest single-day percent gain in stock market history.
Well, I think we're going to lose a lot of it on Monday, so we'll see.
Yeah. So there's more bad news over this weekend as coronavirus spreads in the United States. We're seeing closures of businesses, schools, and universities across the country. The U.S. also extended its European travel ban to the U.K. and Ireland. China has banned all international travel for 14 days, and Mexico and Canada are considering closing their borders with the U.S. There's also talk this weekend of a self-imposed national lockdown of the U.S., plus the effort by Trump and his proxies to stir up xenophobia and blame coronavirus on the Chinese has angered the Chinese government. And China's official newspaper, Xinhua, published a threat to cut off supply chains for the U.S. pharmaceutical industry. If China followed through on this threat, there could be a big U.S. drug shortages, which would be bad for pharmaceutical and healthcare companies.
Yeah, overall, I would say the news outlook this weekend is terrible. In the good news category, Congress and the president did reach a deal on a stimulus package on Friday night, and included in the package is expanded access to coronavirus test kits with health insurers and the government picking up the full tab for testing. So that'll be really bad for health insurance stocks on Monday. It might help quell some fear about coronavirus fallout, but the bill is not really a sweeping stimulus. It includes some sick leave pay paid for by the Social Security Administration, which should help limit the virus's spread and inject a little bit of cash into the consumer economy. But unfortunately, the bill probably doesn't include as much stimulus as the markets expected, especially since it leaves out Trump's proposed payroll tax cut, which essentially got defeated when Congress passed this more limited stimulus bill. So the market's reaction to this bill probably will not be all that positive next week. And as a side note, this week, a couple of the biggest losers in the market this week were gold and Bitcoin. We haven't been talking much about this on the podcast, but if you follow us on Twitter, then you've been getting our updates on this. On Twitter, I've been warning people away from gold because falling oil prices cause deflation, and deflation hurts gold and cryptocurrencies. With the big recent crash in oil prices, the dollar spiked this week quite a bit, and gold, crypto, and also long-term bond funds have been crashing. Basically, as long as oil prices are super volatile, you can expect a lot of volatility also in gold and cryptocurrency, and you can expect them to sort of follow any big price moves in oil with a lag time of maybe a week. So on the upside, gold and crypto should benefit this week when the Fed, in all probability, cuts interest rates to zero on Wednesday. But I think we're going to see continued collapse in oil prices, which would put downward price pressure on gold and crypto. So you can expect, a lot of continued volatility in gold and cryptocurrencies this week. And I would say beware playing this market unless you're, a swing trader or a day trader and you like to just sort of play rapid moves in prices like that.
Yeah, and overall for this week, I think we both expect markets to open down on Monday. There's about a 2 in 3 chance the Fed will cut interest rates to zero on Wednesday, in which case stocks should get a rally then. But if the Fed delivers a smaller than expected rate cut, stocks may sell off.
Yeah, we're probably going to see either 75 basis points or 100 basis points rate cut from the Fed. There's about a 1 in 3 chance it'll be 75 and about a 2 in 3 chance it'll be 100. If it's 75, we will see stocks sell off on Wednesday. So I would say, beware there. There's a real risk going into that meeting that stocks will sell off. I think that the market as a whole is expecting the Fed to cut to zero, but Jerome Powell is a little bit more conservative in his views of fiscal stimulus than Trump is. Trump is pushing hard for zero interest rates, but I could see Jerome Powell holding out and only cutting to 0.25. All right, stocks we watched this week. What did you watch this week, Robert?
So this week I was watching bank ETFs and transportation ETFs. Both were hit hard this week, especially on Thursday, before posting small gains on Friday. However, these ETFs still haven't bottomed out yet, so I'll continue to monitor these ETFs until the market stabilizes before I buy into them. What about you?
Yeah, last week I picked the gold miners ETF and this long-term treasury bond fund that I've been watching. But if you followed me on those trades, then hopefully you're also following me on either TradingView or Twitter, because as I alerted on Monday, I exited those on Monday. And in fact, both of those fell pretty hard this week. Basically, I mean, it was a changing interest rate environment, and the payroll tax cut just kind of changed the whole dynamics of what was going on. So unfortunately, this market changes pretty fast, and you've got to be light on your feet. And if you would like real-time updates, please go ahead and give us a follow on Twitter or look me up on TradingView. I'm Christopher Carroll Smith on TradingView, and you can get more sort of real-time updates midweek. All right, and what are you watching this week, Robert?
All right, so this week, on top of keeping my eye on those ETFs, I will be watching Microsoft and Berkshire Hathaway. As late Friday, it was announced that Bill Gates will be leaving the board of directors for both companies. I would expect there to be a dip on Monday following the departure of Gates, so I'll be monitoring that situation. Additionally, I will also be watching Zynga, Tencent, and my old friend Activision Blizzard. With the NBA, NHL canceling their season, and many other giant festivals and performances being delayed or canceled, these stocks are where people will get their entertainment from. Outside of like Netflix and Disney Plus. So Zynga, Tencent, and Activision Blizzard all have mobile games and esports events, which should still be able to be done without a local audience, and they can pretty much be done remotely. And lastly, I'll also be watching WWE, which Vince McMahon is playing a game of chicken with the city of Tampa Bay in Florida, with WWE refusing to cancel their biggest event, WrestleMania, which is scheduled to occur in April. They're trying to force the hand of Tampa Bay to cancel the event, which either way, it should hit the stock negatively, and this stock has already been beaten down, and it was beaten down way before news of the coronavirus. So this stock is, I think it's poised to hit probably like the $30 mark. It's really getting beat down, so I'll definitely be watching this one.
Yeah. Okay. So as you know, I am still mostly in cash. There's not a lot in this market that I like right now, and I would recommend that other people stay in cash for the time being as well. Remember, the stock market rewards patience more than anything else, and I think we're probably still at least a month from the bottom of this market, and probably further than that. I would expect probably a few months out, we will finally bottom. So hang on and be patient. The only stocks that I think are likely to do really well this week are the makers of coronavirus vaccines, masks, and test kits. For instance, I bought a call Friday on Opco Health, which is a maker of test kits. And I'm also watching a stock called Tegna this week. They have several buyout offers at $20 per share. There are rumors of possibly another cash offer coming in at an even higher price. And right now, this stock is only trading at like $16 to $17 per share. So if one of those buyout offers goes through this week or in the coming weeks, we could see the share price shoot up pretty quick. I think, though, that investors are being a little bit cautious about this because, of course, with the entire market falling, we could see these cash offers fall through, or we could see some renegotiation as the bids are adjusted to a lower share price, which I think is why this has been pretty volatile this week. It hasn't dipped below about $16 per share, but it's swung pretty wildly between like 16 to 750. And hasn't gone above that yet, despite the $20 per share offers. So I have some call options on this, just like small bets that I placed on this that expire on March 20th, and so we'll see if those pay off for me. Other than that, I would highly recommend people stay out of this market. Robert, you got any final words for folks here before we close out?
No, I agree. Staying in cash right now is a pretty good idea, especially if you're still looking to get into the market. I mean, right now is probably not the best time to get in. Hold on to your cash, build up your cash reservoirs, and then be ready for when the stock market shows a little bit of signs of recovery and the news of coronavirus is in the past, because I think that's going to be the major contributor there.
Yeah, I really think of beating the market as being about predicting the news, not about predicting stock prices, because if you know what the news is going to be, then you kind of know which direction stock prices are going to go. And right now, to me, it looks like the outlook for news is pretty bad for at least the next month. I mean, we'll get, bits of stimulus and bits of sort of positive government action along the way, but I don't know that any of it is really going to amount to sort of the level of just catastrophic bad news that's in the pipeline. So, yeah, I'd recommend that people hold off here. Hey, folks, if you found anything useful on this podcast, if we've been saving you lots of money amidst this market crash like Robert has seen savings, then please give us a like, follow, or share on YouTube. Follow us on Twitter, like us on Facebook. Leave a comment on the YouTube video to tell us what a great job we're doing. And we'd also love if you would review us on Podbean or iTunes to help get the word out about the podcast. And if you haven't yet, use our referral link underneath the video to sign up for Webull. If you deposit $100 in your Webull account, you'll get a couple free stocks. And I think that we get 2 or 3 right now as well. And so that helps support the podcast and goes a long way to helping make this possible. Hey, thanks so much for listening, and we'll see you at the zoo next week.
See ya.